just like getting back to the market and seeing what this market has for us, or likely to have for us, for the impending week. What you might have not really noticed is that the market literally shifted into a new phase for a while. Let's say about 3 weeks, 4 weeks, about a month thereon. We were really struggling with finding quality setup, quality movement on the market. And it's not anybody's fault. It's literally because the market decided to just go in a particular phase that you couldn't literally do anything about. Like if you look at this phase right here, if you kind of have a little idea from my very last YouTube video, then it's going to make sense to you so much when I'm talking about things like this. But if you not watch my most recent YouTube video, it's going to be confusing you when I talk about things like this. But look at here, literally choppy up and down. There isn't any significant movement telling you the true direction. And then remember that I'm just using the 4-hour time frame, so I'm talking 4-hour perspective wise. And then if you look at this phase as well, you could clearly see that it's pretty much the same thing, right? And then if you look at this phase as well, you could easily just be lucky to squeeze out some, call it 20-30 pips, but that's not necessarily the kind of move you may have been anticipating, right? It's because, like I said, the market just by itself decided to go into a phase that we couldn't literally do anything about. But last 2 weeks, then I started seeing okay, I think we're good now. Like I said, I couldn't really just believe my eyes. That's how come I couldn't even send like a lot of trade signals, right? But even though I said I couldn't even send a lot of trade, I ended up sending about 5 or more than that, and then it was all like crazy trade. But I said I could have actually sent a lot more, but I couldn't just escape the fact that I was still living in these weeks, and I was just thinking to myself, why will I just keep wasting my time on the market when it's not really like going to move as I'm expecting? But look, we had this GBP USD massively dropping, insane, right? If you really want to count like the pip movement from last week alone for GBP USD, we start from here, come here. That's about 350 pip movement in just 1 week, which is insane. Now, looking at what I expect from GU for next week, right? You already know that I like to target the market in previous lows and previous highs, because it's pretty easy for you to have a solid edge when the market is literally trading around previous lows and previous highs. But we got to also remember that we have what we call the path of least resistance, which kind of tells us that any turning point in the market could serve as a significant reason for the market to change direction. That's how come, even though I have my markup within these regions, then I would also be pretty much watching out for what could likely happen within this area as well, because here too we kind of found this market tap into here, went up, and then came back down, crossed that region. So here kind of serves its own self as, or sets itself up as a region for us to potentially focus on. But nonetheless, I would be pleased to kind of observe that this market makes its way into this lows instead, right, before perhaps pushing up, which would make us not necessarily think that we could be faked out from that region, because it could happen that you could get like the best of confirmation you're looking for from this region. You're going to jump in, and this market is literally going to perhaps serve you some 10-15 pips. You may not be necessarily satisfied to put stop loss at break even from there, or you may not be necessarily satisfied to take any partial profit. But once that confirmation is just lingering around that 10-15 pip, then it's going to be a big movement in the opposite direction, perhaps to come and serve this purpose before the market actually goes up. So I'm just going to be very wary within this region, keep my eyes more focused here, and then just have that patience that I need to see what GBP USD does for me. Somebody is asking, what currency pair are you watching? The currency pair that I just analyzed is GBP USD. Now, one thing that I just forgot to do, maybe I should have actually done that before I even started analyzing the GBP USD, which I always just recommend you to do. It's actually also because that I also did it from Friday, Saturday, and a little bit on Sunday, so maybe it's just like a hindsight. But you got to always look out for what the fundamentals have for you within the week. You want to see if it's kind of like a volatile market week or non-volatile. Volatile market week is when we have like a lot of news releases, like there's a lot of economic data coming out, US, UK, Australia, Canada. So yeah, before anything else, let's just head back to Forex Factory and see what Forex Factory has for us from Monday actually empty day, no news, so we could be totally safe in the market, free from any sudden spike, right? And then Tuesday we have what we call French flash service PMI. It's more related to consumer price index, or CPI. So we have the consumer price and production prime index, all those kind of things. But once you find it in red folder, you could just be a little bit worried that it could have some economic impact on the market. But regarding euro though, so we kind of have some euro information here: German flash PMI, and then German flash service PMI. Then we also have what's the name, GBP flash service PMI. So pretty much more flash service PMI from euro and then GBP. So we got to just keep our eyes on. I think US also have flash service PMI. So I don't know, they all decided to release their flash service PMI, which is like manufacturing index, on Tuesday. So it's only Tuesday that we're going to be like, carefully watching the market and thinking what could be happening and all that, right? If we come to Wednesday, what do we have here? We have core durable goods, orders, blah blah blah, pending home sales, retail home sales. I don't know, nothing so serious for us to be so concerned about. Thursday we have Jackson Hole Symposium. I don't know what really this is about. I've never seen this fundamental event before. I might have to just read about it. But we have German info, IFO business. You see, the moment that I just said that I don't know what it is, I might have to read about it, then it really reminded me about something. Look, this is just like a brotherly advice, because regardless, I'm an older guy, right? Some of you here, I don't know, I may be way older than you, at least 2, 3, 4, 5 years older than you. And then I have people here who are also older than me. If you don't know my age, I'm 29 years. I'll be turning 30 early next year, right? So I literally turned 29 some couple of months back. But one thing that you don't want to do in your life as a youngster, right? One thing, listen, I'm really advising you guys, whether you're older or younger, never do this blunder, is to share ignorant information on subject matters that you have no idea about or less information about. You never want to compromise yourself. You totally destroy like your hard work, your reputation, by wanting to truly be the one that has all the information to say, okay, I know it. You go on any platform, they ask you something, they say, then you're just spitting stupid information that you have no knowledge about. You're going to disgrace yourself. You're going to ruin your reputation. You're literally just like, setting yourself up for disgrace, But more on this later. So honestly, in my own opinion, I do not know anything about Jackson Hole Symposium. So I got to tell you guys straightforward and straight ahead that, guys, I don't know anything about Jackson Hole Symposium. Never heard of it before. So I might as well have to read about it, come back and explain more to you. Simple. Rather than saying, okay, yeah, Jackson Hole Symposium, I saw it some time back, I think it's about some man. You're just being very dumb, lame, stupid, everything else, And that's how some of the people that you guys foolishly, quote unquote, follow be doing out there on the social media. Anyway, Friday we have US core PCE price index, blah blah blah. I don't really know much about this, but I think it's also inflation related. And then we also have Fed Chair Powell speaks. Okay, Chair Powell, everybody knows Chair Powell. And then we again Jackson Hole Symposium. I freaking don't know anything about it, but I'm gonna read about it again. Anyway, so now that we know that, pretty much we are gonna only be focusing on what's the name, German price index, and then Euro price index, USD price index, all on Tuesday, then we only know that it's Tuesday that we are going to, you know, be only worried about. But apart from that, all the rest are not. I don't know why my phone just keeps freezing for a very funny reason, but I don't think anything is really wrong with it. It's just maybe a minor glitch. But now that I've analyzed GBP USD, next thing that I instantly got to analyze, just to be on the safer side, is DXY, right? Which is in fact what I should have even analyzed first. Right? What's going on in the comments? I'm reading all the stuff that is going on in the comment. Jackson Gold is a meeting of central bank heads. Okay, that's a very good information for us to learn about. Anyway, even fashion designer, they train. People are just shooting shots left, right, center. So I gotta also, like I said, watch DXY. Excuse me, guys. I've been sick, you know. I didn't tell you guys, but I've been sick for the past 1 to 2 weeks now. Like very, very sick. Not like minor sickness and then like just calling it sick. But you see, I never really like to dwell on sickness and then be that person who's just gonna coil myself into bed and be like, I'm sick, nobody should talk to me. But I've been really sick, but I think I'm getting better now. I should say, like, over the past week. My wife is a pharmacist, so she's been taking care of me very well. I've been taking so many medications here, so many drugs. If you watch my hairdresser, I should say, there's been so much. So I'm coughing, I have sore throat, I have what's the name, catarrh, all those kind of stuff. But my mistress is taking care of me. She's a pharmacist, so she knows all the proper medications. So I'm being home cared for. If it had got a little bit worse, I'm sure I would have gone to the hospital, but I think she knows all. Regardless, when they take me to the hospital, they're going to still prescribe the medications that she gave me. So I always trust her judgment. So when it's a COVID symptoms, I don't think so. Anyway, I think it was just like a change of weather, a change of environment. I mean, if you're in Dubai around this time, there's a lot of, like, you know, heat, dust. You know, Dubai is literally a desert country. So I think that I generally just personally react so much with dust. I can't take it. You know, smoke, dust, I can't take it. So that's why I'm always very keen on my environment, even the place I live. Ask people that get the opportunity to visit me. Always clean. I don't compromise with, you know, my environment at all. Can't live with dust. I can't sleep on bed sheets for, like, you know, 1 week straight. I gotta, like, always change. Otherwise, I'm just gonna be sneezing, coughing. But yeah, that's just by the way, though. So letting you know a little bit about my state of health. But like I said, I'm very fine now. Anyway, when we look at the XY, it kind of has a little bit similarity to what I was looking at from GBP USD. If you're smart, you should have already seen that by now. Because if you look at the XY, you know, the XY is more like inversely related or correlated with, excuse me if I'm coughing, right? Because I already told you guys that I'm sick. The XY is inversely correlated with the dollar, right? GBP USD. So it means that once the XY is moving upwards, you kind of expect GBP USD to be moving downwards. But if you look at the XY here, you know that we have like this first sort of a minor resistance here, which I believe that it could be coincidentally the same as the same week in which we had that GBP USD week. So if you're counting from here, 1 2 3 4 5 6, let's just fact check to see if that GBP USD region is also going to be 1 2 3 4 5 6. 1 2 3 4 5 6. You see, I don't know if you got a picture. Did you really get a picture? If you're not getting it, you're going to miss out on a very important point that I'm making here. I'm trying to see if the DXY glitch around this region, which had a lower high, is the same as this one, which had the lower low, right? So you see here, movement here, came up, movement downward, and it went up. But if I want to count how many weeks back, it's literally 1 week, 2 weeks, 3 weeks ago, 4 weeks ago, 5 weeks ago, 6 weeks ago. Then it happened here 6 weeks ago. But if you watch for the DXY one, right, this is DXY, then we had it around here. So we want to count again from the current market movement to the very point. So 1 week ago, 2 weeks ago, 3 weeks ago, 4 weeks ago, 5 weeks ago, 6 weeks ago as well. So it kind of tells you how really correlated they are. You know, they are very important. These minor things, like, most people don't even prioritize them. But if you really prioritize it, like, I don't know, I see a lot of people saying, I can't get it, I didn't understand you. Let me see the number of people that really understood what I said. If you didn't understand it, then I'm going to repeat myself again. But how many of you did understand what I said? But market is closed. This person probably started trading from yesterday. You guys are doing well. So all I'm just saying is that if you look at the XY, right, you can see that the market was creating higher high, higher low. So higher high, higher low, higher high, higher low, higher high, and then this big drop. So here was the last higher high, higher low interaction before the market changed direction. But if you want to count from this week all the way here, that's like 3 weeks, 6 weeks back in. Week 1, I know the weeks because of these vertical lines that I have here. You can see, if I come close, you can see some vertical lines. That's why I'm easily able to know that this is like last week, last 2 weeks, last 3 weeks, last 4 weeks, last 5 weeks, last 6 weeks. And then when I come here, I can also see that is what? Last week, last 2 weeks, last 3 weeks, last 4 weeks, last 5 weeks, last 6 weeks. So all I'm just pointing out to you, all I'm pointing out to you, you're hearing the screenshots. You're not the only one hearing it. I like to take screenshots. If you guys are joining like that. Anyway, so here we have like that lower high, lower low formation, and then it pushed here. So I'm just saying that the same way that we have like this low high, lower low, and then expecting that GBP could perhaps hit here and go up, or perhaps even come lower, is the same thing that we could first even expect from the XY, because here we have like that low here, and then we have, that high here, and then another high all the way right back up there like that, right? So one high here and then another high here. So for us to first start anticipating a drop in GBP USD, then we first got to see that perhaps maybe this DXY will trade up to this region and start making lows here. If not, then it could actually breach this region and then head all the way up here, which is going to cause trouble for anybody that start buying GBP USD when the market just opens. So you don't want to be that trader that instantly starts buying GBP USD just because the market opened. So that's the little advice that I'm leaving for you guys. I don't know why my chart markup. Why did I do anything wrong with my chart? I can't see my markups again. Maybe I should just reload it. That was a little bit scary, but yeah, we're good to go, because my chart has some key levels, key lines that when they get missing like that, it's going to cause a lot of troubles. Really working them all back again. So I've talked about GBP USD. I think I think you guys know what I'm looking for. Let's be quick about this. It's already 10:15. Market has opened, so let me just spend the next extra 10 minutes of your time just breaking it down briefly. Maybe we get an extra time to talk about something else, then I end this live session. GBP card also coming into a very important range. How I just like to explain support resistance to you. I just like to use the very wick of the market. So GBP card, we are on the GBP card right now. It's kind of setting itself up as well for that bullish movement, right? But it may not necessarily just instantly start moving like that, because it's a new week. So we may just have the market literally misbehaving a little bit, coming back down as if it's not really making itself up for a bullish move on GBP card. That's all I'm going to say about GBP card. So let's say pound Swiss franc. So all I can just say is that generally I'm kind of very bullish this week for almost all the pound pairs with GBP being the base currency, right? If I look at GBP Swiss franc, when I come to, let's say, the weekly time frame, we may not necessarily be able to see any sort of support resistance anywhere like that, but we just probably going to use correlation to find a true entry for this. But keep in mind, I'm pretty much very bullish this week for most of the pound pairs. GBP JPY, we kind of had JPY being very strong the whole of last week. So even though most of the pound pairs were dropping, GBP JPY didn't drop. But if you know anything about chart patterns, then you can easily identify that it's kind of forming some form of a wedge pattern. Not in the nicest of it, but at least it still qualifies for a wedge pattern. So we're going to see how GBP JPY trades within this range. We may end up having it also break this wedge formation and then trading all the way up. It'll be interesting to see that when it trades all the way up, it's approaching the third touch of our trend line, which is already established there, and then that is where we would end up looking for perhaps another short position to bring this thing back down. But yeah, that's just my anticipation or breakdown for the GBP JPY currency pair. I hope you guys got the light. But yeah, I'll be looking for somewhat of a bullish movement. Like I said, it's what gives me even the confluence to kind of know that most of the pound pairs are likely to set itself up to be very bullish this week. So this somebody would call it their own channel, but I don't really want to call this a channel. It's not a channel. It's like my descending trend line and ascending trend line. My descending trend line tells me my market movement in a bearish market, and my ascending trend line tells me market movement in a bullish movement. And it's a strategy on its own, right? So if you've been following me for a while, you would know that my third touch of the trend line, here you can see 0.1, 0.2, and then we can literally have 0.33 set up right here. Tap into the trend line, gives us the candlestick formation we're looking for, take this move, and then boom, literally up about 120. It's actually 280 pip. Very insane. I actually had the opportunity to jump in on this trade, but that day was when I had taken so much positions. I think I was in the Euro card trade, and then I traded at sent out. So I'm skeptical. What if I just end up sending all these trades, and then the market just reverses? It's going to be a bad day with GBP JPYs wiping out the good positions, which is something that you should also learn, which is tactically being picky with trades, being strategically risk management wise very apt. Otherwise you're just going to be end up just taking any type of trade, and then you lose money. But yeah, that's the whole analysis for pound. I don't really like to trade as much Euro GBP, but I do like to analyze it intermittently, because Euro GBP is the only inverse currency pair for the pound pair. So if you're looking at Euro GBP to be bearish, then you can be anticipating most of the pound pairs to be bullish. But now I don't really see anything revolving around this setup that is likely to make it go bearish, except for maybe looking at this wick range here, which I can tell that we are not really making any effort to trade above it. So if we do maintain that same strength around these regions, then we could see Euro GBP pushing down, and that will also validate the reason why we are looking for more bullish movement in the pound pairs. Let's quickly go to gold. Now, if you've been in my community for a long time, you realize that I tried actually catching gold from here last 2 weeks, right, for a sell. I actually jumped in here for a sell. I almost sent it out to the community, but I'm like, I might as well just keep it to the VIP alone. But yeah, and then you know what happened? We actually got stopped out of this trade. So I took gold here, put stop loss just right above this candle, which I should have actually put the stop loss above this wick here. But the insane thing is that the stop loss would have been very, very enormous, very inappropriate, even though that's the right thing to do, because the setup was literally looking like this, you know, which was very, very, very sumptuous. If you know how I trade, this is like a setup that you know that I like to take. But rather than putting my stop loss just above the last high, which is like the most protective place any trader could put their stop loss, right above the last high, I decided to put it here because I was trying to manage risk. Because if I put it here, then I'm setting myself up for something insane. If gold goes against me, it's going to be mad. But guess what? Putting my stop loss right here was also setting my own self up for the market to get opportunity to come and wick me while it does not trade above this last wick here. So sometimes you can be the brilliant trader, have the most better analysis and stuff like that, but if you don't know where to place your stop loss, the market is always going to take you out before it goes in your direction. So you're not a bad trader, you just don't know how to set stop loss, or you've not really mastered the market environment very well. So yeah, it's something that sometimes occasionally I do fall prey to. So I always tell my people in my VIP that, look, even though we may take 1 or 2 losses, you got to watch how the market plays around thereof. You could really see that the only reason why we hit stop loss, I was just trying my best in my own wisdom and then in my own sentiment to kind of, you know, protect or minimize our stop loss, and then end up even setting ourselves up. So sometimes I'm just so furious and I'm like, I would not even consider minimizing stop loss. Let me just put stop loss where stop loss needs to be. But sometimes I'm also very sensitive, thinking that, okay, if I expand this, it's going to be too enormous, you know. But yeah, that's just by the way anyway. But let's see how gold literally did play out. So yeah, it actually traded along the line, putting us in a little bit of profit loss, 20 pip, 30, 40 pip profits, 20, 30 pip, 40 pip loss, and eventually went all the way up to hit our stop loss. Right after I hit our stop loss, the market closed, because this is where the market ended that week. And then the next week, which I was supposed to have followed up on this trade, which is something that is a skill set on its own that most of you actually lack. Would you believe me that most of you actually lack that skills of a follow-up? Let me see how many of you here that are so consistent with the fact that you take a loss on the market, you don't let the market slide, you follow through to see how the market eventually plays out. So it's one discipline to do. So the mere fact that you anticipated a sell here and then it took you out, then you get pissed and now you're looking for another setup. But have you asked yourself if this setup has been totally invalidated? You know, if it hasn't been invalidated, try your best again. That's why you got to use risk management, re-entry. Yeah, so you got to do that, right? I see Bufflex ABCs, I do that a lot, right? So all I could have done is just follow up here when I had this next confirmation, and then take this trade setup, even though the first one took me out, and pre-anticipate that maybe we could have just, you know, smashed my take profit around here. But let's see how gold ended up. So yeah, you see, right from that entry, no stop loss, hit, no drawdown, and then just jumped right into profit and traded very bearish all throughout last week. So it's my own negligence, my own mistake, whatever it is. But yeah, we move. Next week or this week, what am I looking for gold? All I can do is just be a little bit creative with gold in terms of the movement it created here. Just put this somewhat within this range like that, you know, and then see that, okay, we may have just been trading within this range here. Now we just tapping in a very beautiful region, which is the 1750 area, which is a very strong psychological level. For me, you guys know how I break down my gold chart. If you don't know how I break down my gold chart, then you may have just started following me on YouTube, because on YouTube I have a whole video dedicated for gold. Right now, I used to like trade gold a lot. I kind of limited my gold trading, but yeah, a lot of people were asking, how do you trade gold? How do you trade? So I shot a video somewhere here, I can't really remember, but I think I titled it how to trade gold. Yeah, this video, right? It has 60k, so 60k views 1 year ago. I think I shot it in Cape Town, if I'm if I'm right. Yeah, you can see that I was very young. You know, 1 year can change a lot. January 2021, I shot this video for you guys. I was saying that my network is messing up, but I just want to play that video for you guys briefly so that you guys can just go watch it. But yeah, I was pretty much very young.
Market assassin, aka King of Blues. It's been a long time I dropped any new YouTube video because I've been preparing to drop one of like dopest content you guys are waiting for, which is how to trade gold like a bank.
So like my YouTube has a lot of stuff that if you soak yourself into, you're gonna like gain so much from it, but I don't know.
Yeah, so for a long time I promised you guys I'm going to be teaching you how to trade gold like.
So let's move on.
Now, the thing about us is that as traders we're able to get technical analysis to be able to tell us the best entry point into going in to go long on gold or the price movement.
So you guys, like I said, I don't really want to waste much time with this content, but you just try your best, you know, to find time to watch it. It will teach you the whole breakdown that I have here. But 1750 remains like a very prime area for me, so I'm going to be really watching how gold plays around here. But if I find any rejection reversals within this region that confirms for an entry, then I'll be looking for a buy setup on gold, right? So yeah, even though everybody's thinking gold is going to be bearish, watch out also for bullish movement on gold as well, right? Watch out for bullish movement on gold, especially around this region. But if we do break this region strongly, then we could head straight to 1700, which would be something beautiful to witness as well. Let's head straight to oil, right? Let me just quickly finish my analysis. I know a lot of you are sleepy, some of you are also finishing your bundle, a lot of people are complaining. But here with oil, you can see we were really creating what a very beautiful lower low, lower high, lower low scenario. It's been trending downwards for a long time. So this is like a proper representation of a trendy market, you know, which is like, if you look at this, we drop, pull back, drop, pull back, drop, pull back, drop, pull back, and then just, you know, continuous like that. Now we find ourselves here. This is what we call a bearish market if you're a beginner. Anyway, you know that this also mix up for itself to be one of the most interesting setup for me, in a sense that as far as we keep having that drop, pull back, and then we have like a low that has been established, more like this low here, right? Now watch carefully, watch very carefully. What I do is that I just kind of establish this low here, and then kind of watch this market gradually keep trading downwards. You know, this is how it happens. It trades downwards, moves up, downwards, moves up, downwards. Eventually it trades into the nose of, you know, that angle, and then that's where when it starts making any move of a breakout, I catch that breakout, and then this market will just, you know, explode all the way on the upside like that. So it's really one of the edge backed trade setups that I like. So with oil, I'm going to let it do its own thing for the next couple of days, few days, few weeks, I don't know. Just let it slide all the way, probably till like Wednesday, Thursday. It would have just done exactly what I'm expecting it to do. Then I'll start finding like that bullish, you know, directional bias or bullish move for it, for a buy. So oil is on my radar for a buy as well. But before that, look at the formation. I said it's going to keep trading within this range and then maybe break out. I think we talked about DXY already because we wanted to look at this. Let's look at Bitcoin. It's more like the opposite of what I'm looking for oil. If you look at it, so you see that up, down, trades into the trend line, into the nose of that trend, and then ended up what really just, you know, going spiral down like that. And if you look at the oil setup that I was showing, isn't it the same thing? Opposite of it. Down, up, goes into the trend, and then boom. But if you look at BTC, up, down. Oh, not BTC. This is not BTC. This is BTC. This BTC. So up, down, gets here, and then boom, just like that. But Bitcoin, now what we can see is that what it has got toward the third touch of the trend line, 0.1, 0.2, 0.3. Right, but it's still been trading over the weekend, right? So all this action that we're seeing here happened over the weekend. So it's still very choppy within this region. We can't really make any biased decision here to say let's go for a buy, even though if you try buying here, the stop loss is going to be very huge. Like, it's not going to really make up for a good setup. But yeah, let it slide for now. Let's see how it will be interesting if only and only if, like, it still forces itself to come back into these lows, right? So remember, buy low, sell high, and then sell high and buy low. It's something that you got to, you know, just apply in your trading skills, you know, not buy high and then sell low. Most people buy high and sell low. All of you, most people, they're going to see something like this, and then they're still going to be thinking about, okay, let me sell here and put my stop loss here. Why didn't you think about selling here? You know, because the chances are the person couldn't really know when the market is at a low or is at a high. So that's why when I see a setup like this, then I let it slide and wait for it to come back into a previous low that is established, because the whole concept is what? Buy low, sell high. Yini low, shine high. Yini low, shine high. That thing that the people at the market women have been saying is not only for the market women, it's for traders as well. If you don't understand what I said, if you're from any part of the world, you know thrift shops. Thrift shops, you go buy things cheaper and then you wear them expensive. If you go to the thrift shop, if you go to the market, you go and buy all this faux. In Ghana, we call it faux. Go and pick some 2 cedi dress, 3 cedis dress, and then you go to Bloomberg with it, and people are literally seeing you sparkling. They're thinking that, this guy went to buy it from, you know, some, what's the name? Boutique. No, you went to Cantamanto at 4 a.m. and you went to remove all the quality shoe. And those people that don't know about that move, they will go and meet it at 9 a.m. when you have gone at 4 a.m. to collect all the quality shoes, and they are come to take the assier. So that's what we call buy low, sell high, yini low, shine high. So as a trader, you want to always think around that area. Ask yourself, is the market trading around any low region, or is the market trading around any high region? You know, and then you want to always trade according to that principle. So yeah, I only look to buying Bitcoin when it comes back into any somebody say, what's Cantamanto? You're not from Ghana, obviously. If you're from Ghana, you're not going to ask what is Cantamanto. I don't know. I'm sure Lagos will have some very big market like that. Now I'm on US 30, right? Now US 30, I was supposed to trade it last week. In fact, I was supposed to trade so many pairs last week, like I said. But like, I've just been very skeptical, knowing that the market has just been misbehaving, you know, quite recently. So even when I see a particular move, then I'm just skeptical with taking it. But it didn't really give me any reason to go short here, particularly looking at the fact that, okay, we didn't really, except for the fact that if I'm trying to establish that, you know, this whole region here qualifies for, you know, that support becoming a resistance, but that's too risky of a trade setup for US 30 anyway. Nonetheless, I just suspected that we're going to drop, only coming from my confluence of, you may have known it, overly extended. Right? I'm sure you probably only heard that concept from my Instagram live sessions when I talk about a trade movement that has been overly extended. It means that that's not the average, normal average pip movement of that market, or anytime it makes up for that normal average pip movement, it finds itself reversing into the opposite direction. And that's literally the same thing we are looking at for GBP USD. You know, the average pip movement is about 120, 150. So if it ends up going in one direction for about 230, 350, you should know that it's setting itself up for opposite movement, perhaps before any continuation. And it's like, you know, a very simple way to trade the market and make a lot of money. Actually, I'm still on US 30. So yeah, with seeing US 30 trade all the way up in the same direction, I just kind of anticipated that we could make a little bit of retracement. But I would have been just much more of a good confluence to see that, okay, we could call this resistance becoming a support, or support becoming a resistance scenario, and then, you know, based on that, traders market. But the kind of move that I like is when I am given enough reason to know that trend has changed. So you really know that we are in that bullish movement, making high, low. a trend will only change when the market is not able to supersede the previous high that has made, thereon creating a lower high and then subsequently a lower low scenario. So we want to see if US 30 is going to come back into these highs and try and penetrate and create a new high. Then that way we know that we're still in a bullish market. But if it comes here, depending on price action movement, we're going to know if indeed this market is just going to be stuck here and then now reverse and start creating like that, you know, lower high, lower low scenario. Or, you know, the other scenario, it's not necessarily able to reach that high there, so maybe create this lower low scenario and then higher low scenario and then start creating a lower low. You get it? So instead of creating like, you know, a previous what did I just do? Instead of creating like an equal high before coming down, it's rather going to create like, you know, these lows here, not necessarily getting all the way up into the highs. And some people would like to call it break and retest, or break and retest of the trend line. Okay, broke the trend line, is retesting it. Let's just see. Whatever way you want to see it, it still best fits, and then you can be able to, like, you know, trade the market that way. The interesting one was Nasdaq, and why I say Nasdaq was the interesting one also stems from the most recent YouTube video that I shot for you guys. So you see, the thing is that if you really take my YouTube videos seriously, you should be successful in trading by now, you know. And success, I'm not trying to say that have like the enormous money or have gargantuan money to spend and throw around, but I'm just saying that you should have, like, you know, a vision and know that you're confident in the journey you've built for yourself. Because in this video, which I said how to know the market is about to change direction, I posted about yesterday or 3 days ago, says what, 19k views. This, I really believe that is one of the most important videos that if you've not watched, you gotta watch, because in this video is the same thing that I'll be applying for a concept like the Nasdaq. I think the interesting thing that I should play for you guys in this video is somewhere here. Hold on, let me show you.
Remarkable, lets you easily set.
What is up, guys?
So I think somewhere here I talked about something very important.
So here's 4, 8, 12, 16, 20, 24, 28, 32, 36, 40, 44, 48. Bruh, there's about 2 days, right? So imagine the market literally stalling in the same direction for 2 days. All it's trying to tell you is that the bears are not allowing this market to continue to push up. Remember that the bulls were pushing this market all the way up, and all of
so if you just listen a little bit from what I just said, then we can apply it here. So here we are looking at what? 4, 8, 12, 16, 20, 24, 28, 32, again the same scenario. The market is literally stalling in the same region for a long time. It should just instantly tell you as a trader that the bulls are not having enough strength to push up, or the bears are literally just holding the bull so strongly within this region. So once you spot on any clear reversal signal, then you should know that it's just the right time for the market to drop from that region. You know, you want to be safe, put your stop loss above the region. If you don't really want to risk too much, because obviously put your stop loss above the wick, you're overly exposing your account. You want to, you know, do this, but you do that at your own peril, because it could just wick you and then still continue down. But yeah, it's pretty much a simple setup for you to catch, and it's a very logical application. You know, but it also has the same, you know, I'd say confluence with US 30. You know, US 30, Nasdaq, they kind of trade similar. So US 30 is this one. I'm expecting that up down, so I kind of expect the same thing for Nasdaq as well. So they have like very strong correlation between them. So let's see if Nasdaq will also come up a bit and then continue, you know, that movement, or maybe just totally reverse and go all the way up. So we gotta like just be patient within this region. Now we come back to the euros. So this Euro AED, I'm kind of exhausted already. I know it's been a while I did this kind of thing. I don't know if I should just end this thing here. Are you guys okay? At least with the analysis I've done. I know most of you were interested in Nasdaq analysis, gold analysis, US 30 analysis. Do you want me to continue, or I should just, you know, end here? We continue another time. I have like, we've now crossed half of my watch list. I'm tired already. You guys want me to continue, or I should just end it here? Okay, let me just randomly pick some of them, talk about them briefly, right? I'm not really going to give that too detailed analysis of them. If you look at something like USD Swiss franc, right? USD Swiss franc is supposed to have a very strong relationship with DXY, but we kind of see a very dispersed movement. DXY is literally all the way up there approaching the resistance, but when we look at USD Swiss franc, it's not really approaching any resistance as much, except of course we are talking about it coming here. But why I put this trend line here, if you watched my move, I don't know, I didn't think I put it on YouTube. I think it's just like a close community call with my Kojo Forex Goods traders, is that we have what we call counter trend line. So you know, counter is like the way we play football, and then we are always thinking that, okay, you're literally trying to go score the opponent. All of a sudden you realize that the opponent is rather coming back to score you. So here the bears are pushing the market down. All of a sudden the bulls are just, you know, coming back in strongly. But the bulls are only relying on this trend line, so that's why we call it a counter trend line. So once this counter trend line proves itself weak, then the bears will come back in and push this market all the way down. So I only have this here only monitoring how the bulls keep their strength around this range. But any time where I see any little drop here, then I'm going to short this market and then have it come all the way down. So that's for USD Swiss franc. Let's go to UJ. Let me see if I have anything on UJ. So UJ, I'm only going to say that we came to a very key psychological level, 13700. It's a round figure, and then we're already reacting there. So already I'm looking at more weakness coming in for the dollar. So you could just use that as confluence to expect some short on USD JPY from this region. Maybe come back into 13450, which is going to be about 250 pip movement. So pretty decent movement for us on UJ. CAD has been very, is it weak or strong? I don't know. Last week CAD was very, I don't know, sometimes weak, sometimes strong. Very early on in the week it was very weak. You know, here it just started the week and then boom. So that week, if you look at NZD CAD, it was just pushing up. If you look at AUD CAD, most of the CAD pairs, it was just pushing up. And then all of a sudden, like if you look at GBP CAD here, all of a sudden it just started, you know, losing its strength. And then, I mean, it was very weak, I should put it that way, and all of a sudden started gaining strength and then pushing all the way back down like that. So if I look at USD CAD, only thing I'm going to do is just apply that same counter trend line scenario. You know, you don't got to really force out every trade as a trader. All you got to do as a trader is to set your trap down. You don't have to force explaining every setup. Just set it down, let the market do its thing, and then once the story is clearer, you could know what to do. So USD CAD, I don't really have anything on it. I'm just going to leave this counter trend line here like that. Eventually, if we see something very reasonable here, but remember, it's also in a very psychological level, 1.300. So yeah, within this region, we could see something nice. AUD JPY, nothing on it as much. AUD CAD, also not so much information here as much. Most people were expecting a push up from here, especially if you look at this consolidation region, but you know, this market just kept coming down like that. It's very tricky, so just let me just stay away from it for now. And then AUD USD, I would want to go long on AUD USD only because I'm kind of looking for a long potential on GBP USD, which kind of makes up for a confluence in the AUD USD. So as far as you're looking for weakness in the DXY, then we're going to be looking for strength in all the other pairs. Looking at the fact that weakness in the DXY literally means weakness in US dollar, right? So it's going to be like a scenario like this, me looking for a long year. But it would be only interesting to also know that we kind of have like this resistance area right here for AUD USD, and we want to see indeed how this market trades within this area from Monday, Tuesday, and then we'll see if it gives us enough reason to go long actually. But it also come from that DXY confluence. And as far as you are looking at AUD USD and we're looking at GBP USD, then it's also right for us to look at NZD USD. And we can see that NZD USD has also been massively selling off. In fact, we actually caught this trade from all the way here down here. It was a trade setup that I sent last 2 weeks, and as a swing trader, you gotta have the balls to hold positions. So I'm still going to be looking for longs on NZUSD, but I can't really find any justification for that long. I'm only using confluence, or I'm using correlation, but it's going to be the least favorite one because I have not found any confluence for it yet. Last one is Euro USD. As far as I'm also finding longs on GBP USD, you already know I gotta also look out for what Euro USD also gotta do. Again, it also don't have any technical confluence for me, so it's gonna be like my least favorite option, even when the time is right to choose. So that's how I dissociate from choosing currency pairs when I have like 5. Some people ask me, Kojo, when you have 6 setup, 4 setup, 3 setup, how do you choose? I choose the one that brings much more confluence or much more technical sense than the ones that don't, you know. So GBP USD and AUD USD does bring much more technical confluence than the Euro USD and the New Zealand USD. So that brings me to the end of the long night of technical analysis, breakdown, whatever it is, and catching up with you guys from a long time. You guys have done